What is going on, Ada Nation? Welcome to Dapp Central. I'm your host here, Fareed, and in today's video, we're going to be touching on some key points as to why it's always so important and critical for you to do your own research and come to your own conclusions in the blockchain and crypto space. Now, that said, you can even apply this particular concept to this particular video. Again, don't take what I'm saying here as the truth. Do your own due diligence, do your own due research. And it's okay that we sometimes don't agree. Now, I don't like to single anybody out, but I do have to raise this story, which gives a little bit of context as to why I'm actually shooting today's video. So some of you guys may already be aware, but this is a pretty big personality. I believe he runs a show called Mad Money on CNBC. So today, we're going to be breaking down the fact that Jim Cramer had urged investors within the blockchain and Bitcoin space to sell their Bitcoin at 17K. Now, the importance of this is the fact that 17K was actually right at around the bottom. Since then, Bitcoin has rallied over, I believe, 120%. And again, this goes to highlight that sometimes even the people that you see on TV don't have all of the answers. Now, in just a couple of minutes after we review the highlights of this particular article, I want to touch on the reasons as to why I am personally bullish on not just Bitcoin, but blockchain in general. As you guys know, this particular channel focuses more or less on Cardano, which I think brings a lot of these key points that I'm going to be touching on here in just a moment. So Jim Cramer finally admits that his call to sell Bitcoin at 17K was quote unquote premature. Before I move along any further, I do want to at least commend him for being able to swallow that tough pill and actually owning up to the fact that he had made a wrong call. There are so many people that claim to be gurus in the space that make incorrect calls all the time. And just due to the nature of the space and how quickly people kind of tend to forget, especially when the price is going up and to the right or in the green, they kind of get away with it. Now, because again, he's got such a big platform, I think it's a little bit harder for Jim to get away with it, but he has owned up to it nonetheless. So it kicks off the article by stating, Jim Cramer admits that on his show on CNBC called Mad Money, that his call for investors to sell Bitcoin in late 2022 was extremely premature. Now, Cramer's controversial call on December 5th of 2022 advised investors to sell all crypto investments when Bitcoin was trading at $17,000. Despite Cramer's sell recommendation, Bitcoin has since rallied over 118% and is now trading at $37,000. Funny enough, we just broke into $38,000 earlier today. But as a proof of reference here, I do want to pull up the actual timeline showing you guys and hopefully illustrating and bringing home this point to you guys. So it states here, this is the tweet that he posted on January 9th, and he had a couple more tweets in the actual month of December. So it states here, good chance again to get out of crypto and scale out of Chinese stocks as neither can actually be trusted. So as you guys can see there, completely on the wrong side of the call there. In the weeks, if not months that preceded, we begin to see Bitcoin double over in price. And again, right now it's trading at about $38,000. So I want to kick off today's video by showing that piece off right there. But now let's jump into why I am personally bullish on crypto. Again, don't take this as the holy grail. Do your own due diligence, do your own research. And if you don't agree with some of these points, that is completely okay. But it's my job here to try to read up and get my own thesis as to why I believe and why I'm even diving into this space. So first and foremost is going to be decentralization. I know this is touted a lot, but when you take a look at the systems that we have right now, especially with governments in control of nations, if not countries, right? We have a single point of authority. This creates what we now know as centralization, where everybody has to go through one particular platform or one particular entity in order to get something done. Obviously, the downside to that is whatever that entity is has the ability to abuse their power, but it also causes somewhat of a bottleneck anytime that there is high demand for whatever that centralized authority is providing. So with something like Bitcoin, or for example, Cardano, we have decentralization of the network, which basically means that not just one particular server or one particular person owns the Bitcoin or the Cardano blockchain, but the entire community does. So in Cardano specifically, we've got over 3,000 SPOs or stake pool operators that are essential to the running of the actual network. Now, let's say that 100 of those go down. We still have 2,900 other SPOs that are still able to continue writing and propagating the ledger. So that is point number one there. Again, we are able to circumvent authorities, for example, like governments and just agencies that have had a stronghold on financial access for not just their own nations, but also for others looking to try to get an edge or try to get access to some of these tools that they've never had exposure to. Number two is going to be financial inclusion. So this rides off of that first point. For example, think of getting a loan here in the United States. I know that before the pandemic, that was relatively easy and the interest rates were relatively good. Now, the United States is considered as a first world country. We've also got third world countries where they don't have that same luxury. So I'm just going to use Argentina as an example here, not by any means taking a shot at them, but I know that they just got a brand new president in Javier. And the fact that he is now completely against the central banks that have had so much power in that particular area really goes to illustrate this point. So he understands that they have an issue with extreme inflation. They also have some issues with centralization. Again, everything being controlled by the central bank. And his goal is to get rid of the central bank in order to give financial inclusion to the entire country. So that is point number two. Now, granted, you also have other nations or other countries and even continents, for example, like in Africa, in Asia, in South America, where they also have the same exact issues with hyperinflation and a lot of centralization, which again, the crypto and blockchain space is aiming to solve through financial inclusion. Number three is going to be crypto's limited supply. So when you think of something like the US dollar, again, after the pandemic, we saw the US print, I believe, over 40% of the total circulating supply of dollars in a matter of 2 single years. That goes to show you that over 100 years, they were able to print. In 2 years alone, they've printed 40% of the total amount that was in circulation. Now, the government, again, central authority, has the power to spin up the money printer anytime that they want and for as long as they want, which obviously sometimes that's great here for us in the crypto and blockchain space. But there's time that you don't want that to continuously happen. Over time, as they continue to turn the money printer on and off, what happens is that the value of the US dollars that are already in circulation are now being diluted through inflation. So anybody who held $100 100 years ago could have got a lot more for that $100 than you can with the $100 now due to continuous money printing and overinflation or hyperinflation in the last 100 years. Now, that said, what Bitcoin and Cardano and some of these other assets on blockchains provide is going to be a limited token supply. So, for example, with Bitcoin, there's only ever going to be a max supply of 21 million. That said, that is programmed directly into the code or the blockchain. With Cardano, we've got 45 billion. And again, that is a hard cap. So there will never be 46 billion ADA tokens. So this is a key piece here that, again, ties back to the current financial system that has been gamed for so long. There's no way moving forward once the 45 million ADA or the 21 million Bitcoin have been dispersed to create any more. Therefore, as more demand comes in, the value of the actual asset, whether that's Bitcoin or ADA, will slowly begin to rise. So to wrap up this point, this is a huge key piece that I'm a big fan of when it comes to blockchain and cryptocurrency, is the fact that over time, these assets will actually become deflationary. Of course, as the supply is coming out, there will be some inflation, and some of that goes to the backbone providers or the stake pool operators or Bitcoin miners. The next point I want to jump into is going to be the actual blockchain technology itself. So blockchain aims to not only solve the monetary issues that we have that I mentioned before, it also aims to provide transparency and immutability. Now, right now, as it stands with centralized entities and governments, they can always cook the books. And what that basically means is that they can always go back and rewrite history or rewrite documents, right? Because again, nobody's there to fact check them or watch over them because they don't have to be transparent in order to make things look as they want it to look. There's even been concerns about CPI data in the United States not always being the best. And of course, not everybody has the insights to see exactly how those numbers are calculated and the transparency to actually confirm that everything was done correctly. So with blockchain technology, we're going to be getting things such as immutability, meaning that anything that is written or processed on the blockchain cannot be undone. We're getting transparency in the sense that you can utilize explorers on the network in order to verify certain aspects. And then again, the actual technology itself is revolutionary in the sense that this will help to reduce fraud as well as prevent bad actors from trying to do things in the dark. Moving along, the next thing I want to quickly touch on is going to be smart contracts and dApps. So not only is blockchain itself a super solid technology, but the cool thing on top of that is you can actually build with it. So now within Cardano specifically, we've got things such as DEXs, we've got DeFi, lending and borrowing, we've got gaming projects such as Cornucopias, and we're now waiting on other tools to also come online. So this offers an opportunity because again, we're operating in a trustless environment for anybody who's willing to take it upon themselves to learn the skills, to learn the coding in the background that they need to be able to build, that they can do that in a fair and open environment. Now, granted, building on a blockchain definitely does take some money, right? But if you understand it and you have the willpower, you can actually go ahead and contribute. Now, I do want to just quickly plug in here the content creation route as well. You guys are watching this particular video. Hopefully you guys are enjoying it. If you are, please make sure to hit that like button. It really does help here. But this is also another route that you can go ahead and actually contribute to the blockchain space as well, right? By creating content, documenting your journey. And there's two ways to go about it. You can either take an educational approach to it, which that's what I'm aiming to do here on the channel, or you can take an entertainment approach to it where you're providing not necessarily a ton of information, but you're making it enjoyable and an experience that people really want to tune into. So hopefully this is helping to grow the space. But again, I don't need anybody's permission in order to start posting content surrounding blockchain. Neither do developers need anyone's permission in order to begin building on Cardano, Ethereum, or any other smart contracting platform. Now, I do want to just quickly jump in through some of the last portions here as we get ready to close out today's video. Next, I want to touch on the fact that the crypto space, or at least certain types of crypto, for example, like Bitcoin, can be used as a store of value. So with that said, people can now treat Bitcoin somewhat as a digital gold. In a time of need, they can basically purchase Bitcoin. And because of the facts that I've stated before, you can somewhat use it as a hedge against inflation, again, as well as a store of value. Moving over, I'm going to just quickly run through the rest of these points. We've got global accessibility. Again, anybody with an internet connection can now connect to a particular blockchain and get access to thousands of different applications that they would not have had access to. Some of those include, again, gaming, as well as lending and borrowing. And that is, I think, one of the biggest pieces here, especially when you look at other countries that have predatory lending and have just kind of closed out a particular class of people within their own country or within their own nations. Last but not least, we've got interoperability. And this is another thing here that I'm super excited about. So we've got more and more news coming out about the Midnight Network, which is aiming to be a 4th generation blockchain on Cardano. And this is going to be one of the first utilizing Cardano's service model approach. So what I like about this is that it's now going to be focusing around interoperability, allowing for any other Dapp builder to leverage the Midnight platform. And we actually have SPOs from either Cardano or other networks providing the security for a platform or service like Midnight. So what this does is it creates a relationship between three separate entities through proxy or through the Midnight network. Again, you've got Midnight in the middle, which is the service. And again, there could be hundreds of different services. Just like in the real world, you can get service from 100 different types of businesses, right? So you've got plumbers, you've got car washes, you've got, grocery stores. These are all different people providing you different services. So think of the blockchain service model as a very similar structure where Midnight is just one single service. In this particular model, again, you have somebody who provides the power, right, to run the business, which in this case would be Cardano SPOs early on. You've got Midnight, the service itself, and then you've got some sort of customer on the front end. That could be some sort of Web3 application that needs data from Midnight. So you now have that intertwined relationship between all three parties. And again, this is a key piece here with interoperability. So that will bring me here to today's video. Again, I wanted to touch on the fact that at the end of the day, you always want to make sure to do your own due diligence, do your own research. And while there might be some analysts out there, for example, like Jim Cramer, that tell you to sell Bitcoin, if you don't have your own reasons and your own convictions as to why you believe what you do in this space, you will be fudded out and you will sell your bags at the worst possible time. I hope that you guys watching this channel here were not listening to any of that particular information. And I'm sure that you guys are doing your own research here in your spare time. That's actually what I've been trying to advocate for and what I've been personally doing here on this channel during the bear market. So hopefully you guys found today's video to be helpful. If you did, as always, I would appreciate you if you could tap that like button. If it's your first time stopping by Dapp Central and you want more content like this, consider subscribing. And last but not least, if you have any questions for me surrounding any of the topics that we've touched on or anything surrounding Cardano, feel free to go ahead and leave a comment down below. That said, and as always, I will see you guys in the next video.